Buying a home after a divorce can feel overwhelming, but with the right lending team on your side, the process becomes much more manageable and far less stressful. Today, I'm walking you through what you need to know about buying a home after a divorce, including timing, credit, income, and how to avoid costly mistakes. But first, we need to talk about the house that you may have owned with your spouse. If you did not own a property with your spouse or anybody else for that matter, just go ahead and skip to the next part of this video. But if you did own a home with your spouse, this is critical, and this is kind of the starting point into the conversation, and that is who is going to maintain the house, who's going to keep the house. Has that been discussed during the divorce proceedings? Is the divorce final and that was addressed in the divorce? I like to talk to people before the divorce is final, actually kind of early on in that separation mode where you know that that's the path that you're going, because there are some things that from a lending perspective are important to know if you want to buy a home either during that process prior to the divorce or right after the divorce. And the reason I say during or after, if you reside in a community property state, it's a little more restrictive in the sense that the community property state, the lending guidelines in those states is going to require that your spouse either disclaim their interest in a property that you're purchasing, if that's what you want, or your spouse goes on the deed of trust, which I'm sure your attorney is not going to want to have as part of that negotiation process. So again, in some cases, maybe it's fine, but it's important to know if you live in one of the community property states, the timing for you is very critical, because you're going to have to be thoughtful about your spouse, and your spouse is going to have to either, again, take an action. They're going to be on the deed, which means it's going to give them ownership interest in the property, or they're going to disclaim their interest. And again, depending on what's going on in the story and the journey, maybe that's a big deal, maybe it's not, but it's important to know. Now, as you think through what happens next, the status of the current home, I cannot talk to you about this enough because I've seen so many situations where people think that, oh, you know, I'm getting a divorce or I'm divorced and I quitclaimed my interest off of that property because my spouse kept the home, let's say. Well, quit claiming your interest off the property, or even through the divorce where it says that your spouse was awarded the property or has agreed to retain the property, maybe with a buyout at some point, maybe the spouse gave you money to buy out your portion of the equity in the property. Whatever is taking place there, the key is disclaiming your interest with a quitclaim deed does not take you off the mortgage. Let me say that again. Signing that quitclaim deed does not take you off of the mortgage that you jointly held with your spouse. I share this with you because a lot of people think it does, that eliminates that from their scenario, and it doesn't. Now, going forward, if the divorce decree says that the house was awarded to your spouse, then for future purchases, that lender, assuming that that payment's being paid, that lender is probably just going to be like, yep, got the divorce decree, spouse awarded the house, and it's not our buyer's obligation. But here's where it gets a little dicey, and that is if your spouse goes late on the payment. So let's say that they pay it 30 days plus late, or they file bankruptcy, or it goes into default. All of those scenarios are going to negatively impact your credit profile, which could then impact your ability to get not only a mortgage in the future, but any other type of credit. I've seen it more than I am happy to share. I mean, it's so frustrating because people are like, what are you talking about? I've been divorced for 7 years and now my ex is filing in bankruptcy. Yeah. If you're still on that mortgage, that whatever's being reported on that mortgage is going to transfer over to your credit profile. That's the point of this part of the video. Have to understand it. Talk with your divorce attorney, just making sure you're crystal clear. There's really two ways you get your name off that mortgage. One, your spouse refinances the property, or two, the house is sold. In those situations, you're technically coming off that mortgage, and then you wouldn't have to worry about whatever happens going forward with regard to your spouse staying in the home, keeping that mortgage that was in place that's jointly held, and having any default. All right, so timing, there's a lot of myths out there about, well, I can't buy another house until I get divorced. Maybe, but maybe not. It really comes down to your personal situation. Also, whether you're purchasing in the community property state, if it's amicable and all parties agree, then it's an easier conversation to have in community property states. But timing is not an issue generally. But let's say that you are in the divorce process and your income from a home loan standpoint is going to come through child support or spousal maintenance. Or if there's something else taking place with your assets that's going to drive the income or the down payment, sometimes those situations will dictate the timing of when you can close on the new loan. So again, best advice is to talk with an experienced lender that understands the dynamics of a separation, a divorce, especially if you have owned property in the past together or still own it together, and can help advise you and guide you as you move through the process. Credit, I talked about it, I'm going to talk about it again. It's just important, and this isn't just about the mortgage that maybe you've had or you didn't have with your spouse, but any other joint credit. I always recommend to people when they reach out and say, hey, it's unfortunate, or maybe it's fortunate, but I'm going to go through the divorce process. The first recommendation I have is to pull your credit and know where you stand at that point in time. Because the reality is a lot of things can happen prior to the divorce, meaning that any joint credit that you have with your spouse or anybody else for that matter, that is going to be reflective on your credit profile. So I've seen it all. Like, let's say it was an account that maybe together was being paid off monthly. Maybe it has a $20,000 limit, and the soon-to-be spouse goes out and maxes out that credit card. Well, that's going to impact negatively on your particular credit score and credit profile. So a lot of things that go into the credit component of this. If you've had joint credit, again, important to start this conversation early with an experienced lender. Take a peek at your credit profile, understand exactly which items are jointly held, and then generally your attorney will give you some advice on what to do with those accounts. Maybe they're closed, maybe you take a party off of them. A lot of different scenarios can kind of go into that conversation. But if you're going to close the account, also know that depending on how long that account has been open, if you don't have any other long-standing accounts open, that act in itself, even with a perfect payment history, might drop your credit score. So you can see like so many different scopes of what goes into the strategy when somebody's going through a divorce or is divorced and purchasing a home or even refinancing. Income and qualifying. I touched on it earlier, and if you are somebody that is going to be receiving separate maintenance or child support, that is usable income from a lending standpoint. You will have had to receive it for a period of time. So again, this is why it's so important to think about the timing of the purchase of the new home together with how long you've been receiving those examples of income. Outside of that, assets. We do see as people move through the process, assets get split in some cases. Some cases they don't. Some cases somebody's going to maintain or reside in the home, or and their spouse needs to be bought out from the equity that they've gained during the time that they've co-owned the home. So again, a lot of different scenarios, and working with a seasoned lender together with your divorce attorney is really going to be the best strategy, because it's going to lead you to that successful goal of yours to either buy or refinance or whatever that looks like. When we think about assets, we often see maybe the house is going to be sold and you're going to use the portion of that sale, the proceeds of that sale, to help you with the purchase of a new house. That's okay. And a lot of times your lender, knowing that the divorce is going to be final, or knowing that the house is going to be sold and close on a certain date, your new lender for your new property that you're acquiring, many times they can get those close of escrow dates very close. So we call that a simultaneous closing. Maybe you're closing today on the house that you're selling with your ex-spouse, and you're purchasing your new house today as well. The key is making sure that the title companies that are handling each of those transactions are in communication, and the funds get wired from the sale of the initial home to the purchase of the subsequent home. So lots of ways that you can work through that. Is it ideal? No, because you're waiting on the banks, you're waiting on people to issue the wire, get it out, get to the new company. So I always recommend if you can stage it at least by a day, that is generally best practice, but we've seen it all. So again, just having a really clear conversation with not only in that case your lender, but certainly the title escrow companies that are involved, because the title escrow company are the companies that are actually dispersing funds depending on where you reside in the country to the new escrow title company that is helping you on the purchase. The common mistake I really see is starting this process too late. When you know that it's inevitable, you're going to be going through a divorce, it's okay to reach out, even if you're just in the beginning stages, because as you can see, there's so many different variables and so many different questions, and maybe you don't have your complete understanding with your divorce attorney yet of what that really looks like for you, or maybe negotiations haven't started. It's okay to reach out to a lender, talk about what your goal is, talk about where you are in the process, get any insight based on the state in which you either reside or you want to purchase in. If it's a community property state, they'll talk to you about what it looks like and timing and everything else. So I think the biggest myth is you can't do any of that until you're officially legally divorced, and I would say that's not true. So get started early and just have a good conversation so you are equipped and empowered as you move through the process. If you're going through a divorce or recently divorced and wondering if you can buy a home, the answer may be yes, with the right plan in place. Every situation is different, which is why we take the time to walk you through your options and build a strategy that really works for you. If you have questions or you want to really just explore what's possible for your situation, reach out to us at 480-725-0150, and we are here to help every single step of the way.